All right, good morning. I am back with another edition of the Wednesday live show, and I missed last week. I had some stuff going on, but no big deal. It's been sort of a crazy week here. Um, as you can see, the S&P, which have the SPY up, S&P gapped down on Monday morning, and it's been sort of it's been the one of the biggest sell-offs we've seen in a while. And on Friday, everybody was talking about the 50-day moving average, which on the SPY, it closed just above the 50-day moving average. Let's look at SPX here because it seems like on yeah, there you go. On Friday, the SPX closed below the 50-day moving average, and there was a lot of talk about that. And that happened back in June as well, and immediately reversed and went up. And so, you had a couple of forays below this 50-day moving average here. Interestingly enough, as we look back, there's a poke and then a big rally. Closed below it, immediate rally. And each one of these sort of forays below it, even back here in March, right? You had that one big down day below it, and then very next day got it all back. So kind of interesting. In February, same thing. So I guess that's why everybody was thinking it's a big deal. I went back here to last year because these are the two these are the two times that most recently when the 50-day moving average got broken and spent some time below it, and as you can see, both times recovered. So it'll be interesting to see what happens this time. So of course today is Fed Day, and there's no telling what's going to happen because the market's actually had a little bit of an actual sell-off, which we haven't seen a sell-off sort of this duration for some time. Even the last couple of sell-offs we saw were just a few days, and so this kind of topped out, spent a little time. Monday was a wild day. I mean, I think what was it? The Dow was down 800 or 900 points or something. I forget, but at one point, the indexes were down fairly significantly on the day, and then they recovered a lot of it. So it's going to be interesting to see what happens here because, and the thing of it is, I'm not a huge. To me, the moving averages are more like warning signs when you break below them. It's like breaking a trend line. So if you think back over all the years when you saw the market, break below moving average, spend some time below it, and then rally back up. To me, the sort of the big thing right here is going to be, and I'm going to attempt to do this here on the show, which I don't do that often, but I'm going to attempt to to draw a downtrend line. There we go. That looks fairly reasonable. So, you get a downtrend line there that's going to coincide with that 50-day moving average, and that's going to act as overhead resistance, obviously. Today, anything could happen. Depends on what Powell says. Everyone was sort of expecting that the Fed is going to announce a schedule for tapering or talk about tapering, and which they quite honestly they seem sort of behind the curve on, right? They should have started tapering when everything was looking pretty good. Now that we've had a market sell off and the economy seems to be weakening a little bit, as usual they missed their opportunity. So that's just kind of how things work. So anyway, um, that's that. And so let's look at the other indexes real quick. See what the Qs look like here. Same sort of thing on the Qs. Um, Below the 50-day moving average and just kind of, pushing up at it. And, today we could see a huge rally based on what Powell says in his Q&A. And it's going to be really interesting to watch too because, as you probably know, the Fed, all of a sudden it's been discovered that the Fed members themselves have been trading individual stocks and bonds, and so there's a question of credibility there, quite honestly. So it's going to be interesting to hear if anyone asks any hard questions about that. And Powell's pretty good at dodging that kind of stuff and sounding reasonable. So I don't think there'll be that much made about it. But look at this little sort of hump pattern in the Nasdaq 100 here, and then you look back at this little hump pattern. It's honestly, it looks almost identical, right? And so this thing sort of, it rallied up, stalled out, sort of rolled over, and it was below the 50-day. And you see there was like, about 7-8 days here, kind of floundered around and then right back up. So if I was to draw a trend line on this Q's chart, it would look something like this. Whoops, I got to tell you, these yeah, there we go. So, there you go. There's obviously a lot of room to the downside if it were to sell down to touch this rising trend line, but that would feel like a big sell down, but quite frankly, it wouldn't be that big of a deal in the big scheme of things. If you look at this chart going back to the March lows, so I had a chart with a 100-day moving average, which is this has got a 50 and a 200, and the 100-day is like also a nice kind of support spot on a lot of these charts too. So it is what it is. Let's take a look at I like to look at the Russell 2000 to see what's happening here. This big giant range, I mean, literally still in this same range that we've been talking about practically all year, right? Now it did rally end of the year right up to, what is the range now, but it's kind of gone nowhere. Obviously it's up a little bit. Right at the beginning of the year, we got sort of a big rally that took it up, but it's made very little progress since the beginning of the year. And there's the 50 and the 200-day moving average on the Russell are converging, so that's kind of interesting. But again, it's sort of a market of stocks, and as I look around, you may have noticed that there hasn't been any pending trades for a while, and quite honestly, that's a good thing, because we basically, for the most part, I mean, we actually sidestepped the whole sell-off. And now, there's some stocks are beginning to set up. I got to be honest with you, though, the system's not finding a whole lot of stocks at the moment that are setting up just right. And I think because of the sell-off on Monday, we're still just kind of a few days into this thing. I mean, we were getting a little sell down. It was pretty orderly, which is good. I mean, you like to see an orderly sell down, but that gap down and that big long range day down, adds a lot of risk to it. I think maybe today, after we see what happens, what Powell says after the Fed meeting, that's going to remove a little bit of the risk. But you still got to keep in mind that whatever he says, if we get an adverse or I should say negative reaction to the Fed language today, then there's every chance that the market could reverse and go back down, test these lows. And so it's not really what he says, it's more about the market's reaction to it. Or quite frankly, we could be looking at rallying up and closing this gap by the end of the week. That wouldn't surprise me at all, because that's sort of been like the nature of the market. You get, since the pandemic low, you get these sharp sell-offs, and then it's and of course a lot of it was based on this Evergrande thing, Evergrande Chinese, and I mean, they've talked about it at length. I don't know what to think about it, but the likelihood that turns into some global financial contagion is probably pretty low. And so anyway, the market, over the years I've seen these sort of temporary shocks like that where there's some geopolitical type of thing, and then the market basically digests it, shrugs it off, and rallies back up. So I'm not saying that this sell off and break here is not significant, but at this point, we don't really have to we don't really have to worry about it too much until or unless we see a break of this low. That's sort of what I'm thinking. So everything's setting up for sort of a rally back to. I wish I had saved that chart with the trend line. So I miss my old charts where I'd draw something on there and then it would just stay, right? And so anyway, it is what it is. So no open trades, no pending trades. Everything's kind of on hold here to until the dust settles a little bit. So we're just a couple of days past that big gap down, and so quite frankly, if the last couple open trades we had were looking pretty good. Walgreens was looking real good until the market started selling off over the top. But I just wanted to look at these real quick. If you notice this min over here, that's basically the trigger price plus or minus the stop loss or where the stop got tagged. And so it's just if you notice that Walgreens, oh, my cat's fighting out here. That's what that noise is if you heard it. Walgreens, basically out at break even because the trailing stop trailed up, and then when the market sold off, it got tagged at break even. Twitter didn't fare quite so well. You can see that, almost a 5%, but look at the ones before that, the big winners, Kroger's, Pfizer, 16%, 21%, and then prior to that, same sort of thing, a couple of stop outs, some big winners. And so as you look down there, typically you want to see, and this Neo here, looks like the biggest loser we've had, in some time. Basically, the biggest stop out in the whole batch. But you can see that a lot of the gains are way more significant than the stop outs. And so anyway, that's kind of how you want to do it. Or that's the way we like to do it as far as the system goes, where keep the stops at a minimum and let the winners run, and that's basically sort of the key to it. Obviously you want more winners than losers, and you want your winners to be bigger than losers, significantly too. So anyway, boy, there's a few stocks. Here's one that I've been looking at, Johnson & Johnson. That it looks like it may try and find some support here. Now it's selling down today, but it's got like a little pivot low going, and so this is potentially something that the system could find for a trade setup. It just looks like it's setting up here. We'll have to see. What I was about to say is that I would say like a break over this area right here would be the first thing to watch for. And on some of these, the way that everything works is that this could obviously keep selling down and just break below that 200-day and just keep going. But at this point, as long as that low on Monday holds, then there's some potential there. And so I'm seeing a few charts that have obviously the pivot low, or like pivot low, spike low on Monday, and then a little bit of a bounce into yesterday. But at the same time, this could change today, right? Like this could, if the market were to sell off after Powell speaks or sell off the next couple days, it could obviously take the next leg down. So that one looks kind of interesting. Let's see, what else have I been watching? I'm just throwing some out here that the system hasn't selected anything for pending trades yet. Although I do expect that list over the next several days into next week. That list is going to start growing as the dust settles. And if the dust doesn't settle, then we'll have to see. But it's Coinbase. Yes, this has got. There's the IPO back there. Typically, you're not going to see an IPO in pending trades just because there's not enough history for the system to do the type of analysis it normally does. So this is one I've just been watching since the IPO, and you can see it's kind of forming a rounding bottom of some sorts, and it looked a little interesting a few weeks ago, but has made a lower low. But anyway, it's got some potential. So it's finally building a 50-day moving average. If it can rally over last week's highs, say, then you could potentially get a move up towards these highs. So yeah, I might want to keep an eye on that. This is kind of this Palantir. I don't even know how to pronounce this. It's kind of an interesting stock. It's it's sort of another IPO. There's a 200-day moving average that's actually starting on here, and this thing's had a pretty decent little rally. It broke above. Let me see if I can go back there. Yeah, there was a spot on here, like right there. It broke horizontal resistance, and then with the sell-off this week, pretty quickly went right back below it. But at the same time, it's got a fairly constructive pattern here. It's above the 50-day and the 200-day, and as we speak here, it's just basically struggling with that resistance level. And just because it broke over it didn't mean that it was going to keep going, but just because it has gone back below it doesn't mean that it's not going to continue to go back up. So the other thing I would think about doing here is maybe drawing a see, this is what annoys me about these charts is I had an idea of drawing in sort of an uptrend line, and then when I do this, yeah, okay, that looks fairly reasonable, kind of like what I was picturing there. So this is another one to keep an eye on, and it's got kind of a bottoming pattern. And so let's see, what else is there? I don't have a whole lot off the top of my head as far as stocks that look like they're ready to just bust out and go higher. A lot of the patterns, they started to look pretty good with the sell-off in the market. Like we go back to the SPY real quick. So this sell-off from the high down to the 50-day moving average, a lot of stocks were starting to set up and look halfway decent. And then, like I said, that gap down on Monday kind of blew a lot of them out of the water because they got hammered. And boy, I'll tell you, I mean, the market was down 2-3%. I think intraday it was down a little over 3%, which is fairly significant, but that destroyed the look of a lot of charts out there. Because basically, they were sort of setting up as just a pullback, and then that one particular day really destroyed the look of the chart. So anyway, it's impossible to know what the rest of the day holds with the Fed. Obviously, the Fed's not raising interest rates today, and so everybody's going to be focused on the timeline for their taper. And the other thing is the funny thing about the tapering, right, is so the Fed's pumping $120 billion a month into the money supply, I guess you could say. I mean, into bonds, right? And so, or whatever it is that they're buying with that money. But when they taper, they're just basically going to scale back a little bit gradually on their asset purchases. It's not like they're gonna stop pumping money into the system, and so people are making a lot about it. And over the years, we all know that every time that the market, sells off, the Fed gets like extremely dovish, right? And so it will not surprise me to see a very dovish Powell today. And it's just going to depend on how the market interprets it. And so, um, thing of it is, there's right now is a pretty risky time because they've, as usual, they've painted themselves into a corner, right? Instead of tapering or announcing the tapering or whatever, when things were looking real good, they wait and wait and wait and wait. I remember when Yellen did this, to raise interest rates. They waited and waited and waited, and every time that you thought they were going to raise rates, they didn't, because of something. And then they wait for so long that the economy starts to slow down again, and then and they've waited too long. So maybe is the Fed behind the curve? Probably. But anyway, as far as how that affects the market today, we'll just have to see. So I saw something about Facebook this morning. There was some news on Facebook, and so that's kind of S&P's up fairly significantly, but what we are seeing is range expansion. So that's something to keep in mind, is that we're likely to see a lot more, big up moves and big down moves. Facebook looking particularly nasty here, having given up, a couple of months worth of gains here all of a sudden. So something to keep an eye on. But anyway, keep your eye on the pending list. Within the next few days, hopefully we'll start to see some new stocks populate that. And I think a lot of it is going to depend on what the close looks like today. So there's a lot of stocks out there that can be played off of Monday's low. The market itself is basically kind of hinging on staying above Monday's low. So was that potentially the capitulation move on Monday from this most recent pullback from the highs? Yeah, it could be. I think it came to at the lows it was around 5% off the highs, which is typically where everybody says time to buy the dip, right? Dip buyers step in somewhere between 3 and 5%, and from the intraday high to the low, and I'm not sure about the Nasdaq, but I know on the S&P from the intraday high to low we got about a 5%. So anyway, keep your eyes peeled on new pending trades that might be setting up, and we'll just have to when I come back next week, obviously we'll know what the reaction to the Fed stuff today is, and so I will see you again next